Imagine being trapped under a mountain of $1.7 trillion. That's the staggering amount of student loan debt in the United States today. To truly grasp the enormity of this, consider this. If each dollar was a second, it would take more than 53,000 years to count to $1.7 trillion. Now, let's break down these numbers. There are approximately 45 million borrowers, each saddled with an average debt of around $38,000. That's nearly 1 in every 7 Americans. This isn't just a problem, it's an epidemic. But how did we get here? The roots of this crisis can be traced back to the mid-20th century, when the federal government started to guarantee student loans. This was a well-intentioned move to make higher education accessible to all. However, as tuition fees skyrocketed, so did the amount borrowed, leading to the crisis we see today. Adding fuel to the fire, the companies managing these loans have been accused of misleading borrowers and mishandling their accounts. These actions have resulted in borrowers paying more than they should, further deepening their debt. The crisis doesn't stop at the individual level. The ripple effects are felt throughout the economy. With a significant portion of their income going towards loan repayments, many borrowers are unable to contribute to the economy in meaningful ways. They're delaying milestones like buying homes, starting families, and saving for retirement. This not only affects their personal lives, but also hampers economic growth. With millions of Americans burdened with this debt, the question remains, how has the Biden administration addressed this crisis? Enter President Joe Biden, inheriting this colossal debt crisis. How has his administration responded? The Biden administration took decisive action, reversing a Trump-era policy that resulted in the cancellation of approximately $1 billion in student debt for 73,000 borrowers who were defrauded by their colleges. This policy shift restored full loan forgiveness, a relief to many who had only been granted partial relief under the previous administration. The Department of Education, under Biden, also sought to simplify the forgiveness process for students affected by school fraud, a policy known as borrower defense. This move was hailed as a positive step, yet many advocacy groups still call for a more comprehensive overhaul of the borrower defense program. In a nod to the gravity of the situation, the Biden administration extended the pause on student loan payments and interest until at least October 1st, offering temporary relief to federal student loan borrowers. Yet Biden's policies are not without their critics. In a Fresh Start plan, the administration sought to help 7.5 million borrowers who were behind on payments to return to good standing. This move, however, was met with resistance from some lawmakers who argued it enables delinquent borrowers to accumulate more debt without ensuring their ability to repay. Despite calls for broader student loan debt relief, President Biden has resisted, preferring Congress to address the issue. This stance has drawn criticism from those who believe the administration could do more to alleviate the burden of student loan debt. While these policies have brought relief to some, critics argue they fall short of a comprehensive solution. So let's examine the true effect of these policies on student loan debt. We've seen the policies. Now let's examine their impact. In the face of a daunting student loan crisis, Biden's administration has taken several measures to provide relief to borrowers. Let's delve into the numbers to understand the impact of these policies. One of the most significant moves was the cancellation of approximately $1 billion in student debt for 73,000 borrowers defrauded by their colleges. This shift towards full loan forgiveness was a welcome change after the previous administration's partial relief calculations. It simplified the forgiveness process for students affected by school fraud, and, although seen as a positive step, many argue it's not enough. The Biden administration also announced a Fresh Start plan to help 7.5 million borrowers behind on student loan payments return to good standing. This plan allowed defaulted borrowers at least 1 year to make payment arrangements before facing further collections efforts. While these actions have provided relief to many, they've also stirred controversy. Critics argue that these policies enable delinquent borrowers to accumulate more debt without ensuring their ability to repay. But what does this mean for the economy, particularly the middle class? Student loan debt has a significant impact on consumer spending, wealth accumulation, home ownership, and even retirement savings. By providing temporary relief, These policies have helped to alleviate some of these pressures. However, the long-term effects of these measures are still uncertain. There's no denying that these policies have provided some respite to borrowers under the weight of student debt. Yet the question remains whether they are sufficient to address the magnitude of the crisis. The administration's resistance to broader student loan debt relief raises questions about the sustainability of these measures. There's a growing call for a more comprehensive overhaul of the Borrower Defense Program and for addressing the issue of student debt at its roots. Despite some progress, the student loan crisis remains a significant concern. So what can we do about it? This isn't just a policy issue, it's a conversation that involves us all. We're talking about the future of education, the livelihoods of millions, and the economic backbone of the nation. We're talking about you, your children, your neighbors, and your colleagues. It's a discussion about our collective responsibilities, our shared dreams, and our common challenges. We're looking not just at numbers and policies, but at lives and futures. We're exploring the ripple effects of student loan debt on individual growth, family stability, and national prosperity. We're seeking to understand how each measure, each action, each decision shapes the landscape of education and the trajectory of lives. This conversation isn't complete without your input. Your experiences, your insights, your ideas are crucial to this discourse. You might have practical suggestions, innovative ideas, or personal stories that could illuminate the issue further. You might have questions that spark new lines of inquiry or perspectives that challenge the status quo. Your voice matters in this discussion. So join us in exploring solutions to the student loan debt crisis. Share your thoughts in the comments below.